Peter Cardillo, Chief Market Economist of Spartan Capital Securities. Peter, hi. Thanks so much for joining ET now to talk about the Fed rate hike and the statement given by Fed Chair Jerome Powell. First up, a 25 basis points hike is something that was pretty much expected by the markets at large. But the interesting part is that they have dropped the quote-unquote accommodative stance. That is one big change which has happened from the past FOMC meet outcome and this time around. Could you tell us what it means for the economy? What are the kind of triggers that has propelled the Fed, the FOMC to take that stance?
Well, I think the Fed has sent a loud message to the markets, and that is simply that the economy is doing well, and they expect the economy to continue to do well. And the time has come now to get rates back to normality. And with the economy growing a little over 3%, it's quite obvious that the Fed needs to take precautionary measures and reinstate the normality of interest rates. And I think, we saw a belated reaction to that in yesterday's stock market. Immediately following the news of the rate hike, we saw the market actually continue to move higher. And then towards the latter part of the session, we saw a reversal. And the reason for that is I think that investors got that message, and that message is that the Fed is not going to stop in raising rates, perhaps until the latter part of the second half of the new year, which means we're looking at another rate hike in December, and then probably three more in the first half of 2019. And that would just about bring us back up to normality.
Right. They've clearly stated the fact that another rate hike could be coming in December, 3 more next year, and 1 in 2020. But the economy of the United States has been on a fast track for the last several years, for almost a decade now. What is it that's making them so optimistic about the economic growth going forward as well? Because the market seemed to have been a bit divided whether or not the FOMC will be on track of tightening a tightening stance, or whether they will actually slow down the rate hike process that they have been on to.
Well, the only way I see them slowing down, that is if the global economy begins to slow down and the effects of the slowing Chinese economy begins to spill into the global markets. And that's obviously due to the trade war. In fact, Mr. Powell was very clear about that when he said that the Fed is hearing more and more concerns regarding tariffs beginning to take a bite, perhaps in corporate earnings. And in fact, we've heard that from several companies. And so I think the fact that the Fed is determined to raise is pretty much predicated on the fact that they don't really see the trade war imploding on the economy. But again, a weakening global economy would obviously have a ripple effect, and of course, the emerging markets would be the markets that are going to get the first sniffle, and that means that we have to keep a close eye on the global economy, and then eventually it will slow down the U.S. economy. But again, it all depends how long the trade war continues. Will the United States or will China begin to back off? That's the key.
In fact, I was also coming to the trade war point of view. Jerome Powell had, in fact, gone on record to say that he's hearing a lot of concerns about the chaos that is happening due to the tariff wars. And following the entire speech of Jerome Powell, even Trump had given a reaction saying that he is not happy with what the Fed has taken in terms of their stance and in terms of the rate hike. So going forward, how do you see the trade war play out? Because clearly even within the Trump administration and within his own guys, there seems to be a bit of a conflict there.
Well, there's a conflict, but, you know, I think a key point that Mr. Powell made today was that he was very clear that the Fed was going to stay independent and that, you know, the Fed is going to continue to do what its mandate obliges them to do, and that is, of course, keep inflation at low levels or at bay, and, of course, continue to keep the economy growing at a solid pace. And he was quite clear about that. So, yes, there might be internal and external conflicts, but I think the Fed speaks for itself. And again, as I mentioned at the beginning of the interview, that I see the Fed's continuing to raise hikes and to raise interest rates, and they're probably not going to stop that campaign well into 2019.
Thank you so much, Peter, for joining us this morning and getting us your view on the FOMC rate decision and what it means for the markets and economy as a whole. And staying on with the